morning and welcome to another edition of Roadhouse Live. We are live. Today is August 24th, 2023. Bender, what you know, man?
What do I know?
What you know? What's new in the world?
I don't know. What's new? Obviously the Nvidia candles were fun to watch
Yes,
after hours. Apparently they did okay.
they did. Those are some really, really great numbers. Got to say, going back and looking back at them, those are some really, really nice numbers. Really nice numbers. Predicting price action afterwards becomes a little bit squirrely, but those are really, really nice numbers that they threw up. So congrats to them. Um, what else you
What
got?
were you
Anything else?
saying yesterday about uh what were you saying yesterday about, well, if they report well and something about the it being telegraphed.
Yeah, I think
I
it
can't
being
remember.
telegraphed. Yeah, no, this is probably the most telegraphed ER result I think we've ever seen. Um, we had a slew of analyst upgrades coming in. We had price action that was bonkers to the upside. We had flow that was ridiculous to the upside with very few downside hedges, very, very few. Um, the buzz surrounding it, was very, very strong. I did not anticipate them to re-guide again. Now, granted, you can look at it and be like, that is a guide up. That is all these things that they're saying. But then it goes back now, the day after, if you will, as far as, okay, now what? Do we march this thing to 550, 600, or do we is even the guide, is that even baked into this current set of numbers? But as far as it being telegraphed, the flow was there, price action was there. That bounce off of 400 was, or 404, whatever it was absolutely miraculous. It's like to think that earlier this week, right? I think it was this week. It was down to like 404, and then it rips 100 points. Like that's fairly intense, and I think it shows the level of need to be within that stock, one way or the other. So from a telegraph standpoint, flow was there, narrative was there, price action leading up to it was there, and I think it's very rare when you have all those things coming together, you actually get a green candle, and we got a green candle. Now the question is what's next for it? What does it do, and what does it do to the market at the same time? I think what was most interesting about it for me was seeing Apple red after hours for the most part, not taking any of the upside pop in any capacity. I could mention Intel also, but they really don't count. Um, but Apple in particular, considering that it's put the entire market on its back the past several days, um, that has been very, very interesting. And then you go back and you kind of look, it's like, okay, so Meta, when I was looking at it, it's like it's still trading under 300. AMD still, again, that 110-ish number, unable to really, really do anything with it for the most part. Um, a lot of other tickers that looking at it, it's like I didn't necessarily see the responsiveness for a continued move to the upside, especially with Jackson Hole being on deck. And that's kind of how I'm looking at it today. And I tried to put on a short last night and got popped out, got back in later on in the night and got a couple of points to get back to square, but should have kept it on, would have paid nicely. But the point basically being is with Jackson Hole being tomorrow, we have to expect, in my opinion, there to be some pretty interesting volatility when it comes to the dollar today. I think the dollar could be one of those things that, the fact that it's been in this massive falling wedge on the 1 hour, and maybe even longer term, and it's just now starting to turn up here a little bit, could be very, very precarious. Yeah, no, that little falling wedgie dealy that it had on the 1 hour is now all the way back up to the top.
Yep.
and is about to sit there and snap high. So you had that move on the dollar. The question is it going to continue to move? And in a lot of ways, I have to, if I'm looking at the narrative, I have to say, yes, it's going to continue to move to the upside because the concept of higher for longer definitely keeps the dollar elevated. It does not put the dollar in the toilet. And considering the weakness that it's had here recently, and I say somewhat recently, it seems like today would be a day that they moonshot the dollar and kind of move these equities back down. That's how I'm seeing it. That's why I tried to short it last night. First attempt didn't work. Second attempt worked. I just didn't hold on to it as long as I should. And I think in a lot of ways, I know we don't like to talk about bias, but my bias, if you will, is going to be firmly based on the move of the dollar. I'll also say this, getting back to NVIDIA, the amount of upside call flow that was in NVIDIA for this month and next month and out to October is fairly fucking ridiculous. Fairly ridiculous. And I think on the show yesterday, I said that I would have a hard time seeing it open up above 500. And we're sitting at 500 flat right now. I don't think that it's going to be able to hold 500 for the day. I don't in any capacity. I think that nothing to do with the company, nothing to do with anything other than the fact that there's going to be some option holders that are going to short it to make up for what they didn't get. And there's going to be some people dumping out of calls pretty heavily at the same time on NVIDIA. So that's kind of what I'm looking at in a lot of ways. So the two catalysts that I'm seeing is potential weakness in Apple, panic and not getting 800 points to the upside on NVIDIA, and the dollar walking up. So that's what I see with my OHOs. Now, can it change? Sure. Do I have to be willing to say, hey, you got it wrong and look the other way? Absolutely. But in a lot of ways, that is what I'm looking at coming into this morning. And this is kind of how they've set the deck out a little bit, especially with durable goods orders coming in well. It's a nice number. That's a strong data point for the dollar. The revised down, if you will, on the employment numbers, that again is not enough, in my opinion, to come across as negative data, considering how strong that number is sitting overall. So I think that from a data standpoint, it's difficult to take shots at the dollar, especially going into which is an event that's going to define the next couple of months. And if you it's interesting. If I go back to 2019. I think it was 2019, might have been 2018. Same similar type of setup, but this is when Amazon was a monster. This is when NVIDIA was first really starting to get its legs, that kind of stuff. Netflix was an absolute monster also. Meta, obviously, super strong. There was a Jackson Hole event. That's when we were starting to talk about QT coming off of the 08 financial crisis, or QE, and moving into QT, and the market spilled out just in such a nasty fashion all the way up until Christmas Eve. And then, we got the relief rally and never looked back as we marched towards all-time highs. I think there's a lot of parallels there. I think there's a lot of things that you can look at the same time that kind of speak to the same manner. But and again, it's like, I think one of the things that is, I think the hardest thing for me in trading is seeing certain things and then seeing them play out sometimes weeks and months later when I can vividly see what they are. And being so bent in my thought process of what I believe should be happening, as opposed to allowing the market to get to where it wants to go.
Absolutely.
Now, it's like that's the most difficult thing for me. Even last night, it's like when I was looking at it, it was like, dude, there's no reason the NASDAQ or the NQ should push a higher high than it did post NVIDIA ER. There's no way it and what did it do? It ripped another 30, 40 points higher. So it's like, and then where are we now? We're coming into the morning right back in that same area that I shorted it last night, right back into that same little grouping. So I think you have to be very, very careful to not get too far in love with your narrative and thought, and make sure that while you're using that, you're also using the charts and the flow to tell you what's going on, and not be so fucking rigid that you're willing to take it in the face so you can, in theory, in some capacity, be right. And I know these are lessons that are talked about all the time. It's like, what? Be nimble, be fluid like water, be this, be that, be that. Um, Sometimes easier said than done. But at the same time, it's like, if you like your money, you need to figure out how the fuck to do that. Otherwise, you ain't gonna have any money. So we can look at all of these things in front of us, but at the same time, we have to respect what the market wants to do.
Yeah, I've certainly missed out on my share of, trend day moves because I had some other, idea in mind and didn't flip that from that idea fast enough.
So
You know what I mean?
yeah, well, I'll give you an example. It's like yesterday we had a massive trend day up. I can pull up my little order book or whatever and show you. I literally bought the bottom with a full NQ contract pre-market yesterday, and I got some nice little points off of it in the mornings, and then I spent the rest of the day looking to try to short an animal that it was on full fucking tilt to the upside. If I would have just laid it in, put in a stop, even break even at that point and walked away, I would have been better off just letting the market do what it needed to do. And obviously it needed to squeeze. It needed to do something.
Yeah.
And it did. And I left a lot of money on the table. And I ended up, I think I scratched out maybe $150 when I was up over 1,200 at one point, just on these couple of little trades. It's like that. That's just fucking stupid. So I don't know if this helps anyone, but I think it's important that you not trip over your own dick when it comes to trend days. Don't do it.
A lot of people struggle with trend days, right?
Yeah.
It's not uncommon.
I think sometimes. Go ahead.
Well, especially when the environment that we've been in, some of the candles, just evil, fucking candles that you get that just kind of out of nowhere, it's like, oh, we're trending up. Oh, never mind. Mm-hmm. Take it all out. I think, for a lot of people, it makes staying in on a trend day more difficult, but you're absolutely correct. It's like, pick your spot, set your stop, pick a target. There's nothing wrong with picking, if we're going to trend, there's nothing wrong with picking out levels and upside targets where, if nothing else, if we get to this level, I expect a pause or, a small pullback. There's nothing wrong with, taking profit off the table, waiting for that pause or slight pullback as a re-entry point, but trying to play, against that trend. You have to be very precise, and if you're gonna take your shot, there was one spot yesterday that I was looking at going, well, and I think I even said it, like,
Yeah, you said it.
I said there's nothing that I'm seeing that's telling me that this is gonna change. I'm not seeing anything that says sell it. If you were gonna take a shot, this is about the lowest risk spot to do it, because you know really quickly. But yeah, yesterday, in the morning we talked about the potential for seek and destroy type day. Doesn't mean it plays out. clearly.
That's like the first time that's been mentioned heavily, and it did not play out.
Yeah.
Um,
And it's
and unless the seek and destroy was the inverse, and it's like, oh, you if you hold it short, we're going to destroy your ass, which they did, which they absolutely did. So maybe it worked the other way. I know, maybe I don't understand the concept.
no,
well
I mean, the concept is just that, okay, so we have the same thing going into this morning, right? What you see here on the chart is Asia session low right here, Asia session high right here. London takes out the Asia session high and the Asia session low, right? It takes out both the high and the low. So when that happens, then it's like, okay, so now that those targets have been taken, what the expectation is that more often than not, that in the London session they took out the shorts and they took out the longs, and that going into the day, that we would see similar price action. We don't always take out the highs and the lows, but a lot of just stops and no continuation. No, if you were playing this as a breakout trade up above that London session high, going, oh, if it gets above that, then I'm going to take it, right? And more often than not, when you have these days set up this way, if it does take it, it comes right back down.
Yeah.
And it starts taking out stops the other way, right? So,
yeah.
But my point is, yeah, yesterday coming into the day, we all saw it. We were set up for it. We knew it was a possibility, but that's not what happened. And, I was watching all the things that I watch, not once throughout the day, did things flip to a sell signal. Not until the very, very end of the day. And it gave like a little pullback, right?
Those are tough days to trade, man. It's like those are days that if you can get in, with what you believe is going to be the trend, if you can get in low, you just put it in and walk away. Now, obviously, hindsight is 2020. You don't know until after the fact, but there were a lot of things that were pointing to a relief rally that, whether or not you wanted to see it or not, whether you even had any concept that we could squeeze the way we did, because that was a pretty significant squeeze. If you look at the lows from yesterday to where it closed, that was a significant fuck you to anybody that even thought about getting short really over the last 2 weeks. That like the one day they said, no, we're going to put it in your butt real good. We're going to make you reset the deck, and not try to front run anything that happens, whether it be Nvidia or Friday with Powell. Like they reshuffled the deck. So you can look at that. You can look at if you were short or trying to get short in that period of time. You can look at it as far as being, angry or whatever. Call it bullshit or say, oh, it's all rigged or blah, 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 whatever you want to call it. But the reality is now you have a reshuffled deck. Okay, let's deal some fucking cards and go. New day. Deal the cards. This is where we are.
My point to all of that was that, I didn't get in long and just stay in long, throughout the day. But I also didn't try to step in front of the train because just because we had the idea that, okay, it's setting up that it may be a seek and destroy type day. It still goes back to the chart. And if that's not what's going on, if you're watching price action, you don't sit there going, oh, well, it's supposed to be this. It's supposed to be this, and watch it and try to fight it, and it goes back to what you said initially, like, staring at the chart, thinking that what's going to happen and what should happen. There's no point in caring about what you think should happen.
The should.
And fighting it and watching it do the exact opposite, going, this is bullshit. Why is this happening? It doesn't matter. None of that matters, right? So
the should is such an evil. But yeah, it's getting these.
It is evil. Okay, so looking at the ES here on a 60-minute, let's zoom out real quick. Here's a 4-hour, just to kind of get the scope and bigger picture. We talked about the channel. We were up against the top of the channel. We came down, broke the bottom of that channel, and we made it to the midpoint of what is essentially one standard deviation off of that parallel channel, right? And the last time that, zoom back, go back a little bit more here. So we were kind of up in this channel. It broke lower. We got one deviation of this down to here. And then we kind of fumbled around in here, came down. And now we're sitting right at the midpoint of, what would be another deviation of the same channel, sitting right down in here, would be the bottom of that channel. So, we bounced at the midpoint. We kind of were talking about the fact that, all right, if, we get below this midpoint and that becomes resistance, that we could see ourselves walk down to the bottom down here. But that never happened, right? It came down below and popped back above. And then we got this move yesterday. So going to the 60-minute, I'm keeping the midpoint of this channel down here, on any sort of real sell. This is still the area of, I guess, concern, is that if it comes back down below here and then it does indeed become resistance and starts making lower lows, if this right in here, if that would not have made a higher low, if it would have come down and broke this, I'd be looking at that going, yeah, they're gonna come, likely work its way down to the bottom of that channel. But that's not what happened. It started making higher lows, higher lows, higher lows, right? So
some pretty fucking wild ass candles to the upside too, like neck breaker candles.
Yeah. So what I've got now, in the shorter view, closer view, is this 60-minute fair value gap right here. So I'm going to extend that line out. So I'll keep track of that. This will be another one of those areas where it's like, okay, do we come in here and fill this fair value gap? And then that was the objective and come back down, or do we get through it? Because looking at this chart, it's like once we're through this 60-minute fair value gap, if you look back, there's not much that went unfilled, right? You had these candles down. This one came right up into the top of it, pretty close. So there's not a whole lot left behind. You got this little gap in here that wasn't quite filled. But outside of that, there isn't a whole lot that was left behind outside of this, right? So to me, where it's going to be telling is if we can get through this and take these highs right here at the top of this daily volume imbalance, that still exists. It's still sitting out there. So, we look for them to lay a candle over this at some point, and then that goes away. But then this area right in here is going to tell us if we are going to go take these highs out. again, it's kind of the only thing left. The only thing that we left behind that's very clear.
Mm-hmm.
So if we get through this and that becomes support, then up we go and we start taking this stuff out. All these highs here where there's stops, we start taking that stuff out. On the flip side, if we get through this and then can't sustain it and pull back and start pushing lower, then that would lead me to think that, okay, that was the liquidity run and we have, some areas now, left behind below. This one was filled in here. This 60-minute fair value gap was filled in here. We've got this regular trading hours gap that's still sitting out there. So if I go to regular trading hours, you can see there's a gap right in here. Now we're currently sitting 44.50, so they could realistically fill that at any time and, push up from there. And that wouldn't really be, it would, no one's going to like watching us come down 50 points.
Or but the exact opposite, fling it back up to that area. And then like if I were an evil bastard, that's what I would do.
Yeah.
I would send it and then bring it down.
Just trying to paint the bigger picture here is whether or not we get through this and hold it, right? Or if weakness is going to come in and we're really going to, sell at this point, if we find ourselves, let's say let's see, that fair value gap was filled. At this point, if we come in and we're back below 4,400, and don't reclaim it real quick, that becomes resistance right in here. If we're below this line, that would look like a pivot that becomes resistance, and then we're going to go take this out. And if we do, if we take out 43.50, I'd be looking for the bottom of that channel. We take it out and then we can't reclaim it. So that's kind of the bigger picture, right? Real quick, I know we're like super short on time at this point. So the 15-minute, again, we've got Asia session low, Asia session high, London session high, London session low. And we have this, you can see this 15-minute fair value gap left behind. So if we break, you can see right here, this little candle took out this previous low. If we take this out again, then I would look for this to fill in, right? And if we get through it, if it doesn't just come fill the bottom of that, and then, which I wouldn't really expect it to, if it's going to come all the way back down here, this is where I'd be watching it though to see, okay, do we fill that in, and then, watch the 5-minute to see if you get that setup where we make a candle up, leave a fair value gap, come in to fill it, and then go higher. That would be the reversal. If we get through this to the downside and this becomes resistance, then I would be looking for lower. Watch this 44, 42, 25. If we find ourselves below that, then I would target bottom of this 44, 24, 25, and then you have this old regular trading hours gap. The reason I say the bottom of this is kind of key is because this is also where we closed yesterday. So going back to regular trading hours, right? 44, let's see, that was an up close candle, 44, 48 half right in here is where we closed yesterday. So yeah, it fills in that 15-minute fair value gap, but it also fills in the regular trading hours gap that is sitting in there. So
very good. Thank you, Bender. Really appreciate it.
Yep.
Sonny, what you got, buddy? If you're still with us.
Oh, dude, I got so much. Got upgrades on NVIDIA, more NVIDIA, and NVIDIA. And then they said, oh, we upgrade Splunk, Snow, and ADSK also with it.
Oh.
AMC got an upgrade. They completed the reverse split. They're at $17, so don't panic. They were like $1.50 yesterday, I think. So the price target by Wedbush is 19 on that. It's hovering around 17 something this morning. DFS also got a nice upgrade, and KView. So KView is supposed to join the S&P 500 tomorrow. I think
Okay.
a couple of mods are in that. Downgrades: ADI, ELALLY, and Piton. No surprises there on the Piton. So Blink Charging had news this morning. They've been selected by the Tennessee Valley Authority Electric to put charging stations in. Got a little spike. I don't
It's a
expect
heavy
much.
dark pool that came in yesterday. I think like 8%.
Yeah.
Yeah.
Plug's been getting some, dark pool and some flow yesterday and the day before. One that's been missing is your favorite CHPT. Haven't heard much on what's going on with them. So we have Barkin at noon on CNBC. So gotta watch that. He likes to give some pointers as to what he thinks the market will do.
Yeah.
So NVIDIA also put out a news that, if there's any further U.S. export curbs on the chips to China, it's going to affect the whole market, like the whole industry. The U.S. firms will permanently lose business. So just put that in perspective. China accounts for about 25% of NVIDIA's revenue from the data center business. So understandable they'll put something like that out. BA, our favorite stock, bad news used to be good, but not bad news is now bad news. So they found an issue with the 737s again. So Spirit Aerosystems said, hey, yeah, we are aware of it. Doesn't affect what we already made, but it does affect future deliveries and make them possibly miss their annual target. So BA, this came out after hours yesterday. So BA was down about 2-3%, and
Definitely
SPR, I
dragging the
think
Dow. Yeah. Dow
it was
definitely
about
taking it in the
5%.
face overnight.
Yeah. And the other one, I think, and this will affect Google, Meta, Trade Desk in the next quarter, is EU, the Digital Services Act takes place starting tomorrow, which basically requires them to hand over data as to how they target individuals, companies for advertising. So I definitely think that would, going into next quarter, as these big tech companies get used to it about the privacy and advertising, will probably take a hit there.
Very nice.
And yeah, that's it.
Stonkington, paging
Whoa.
Stonkington.
I'm
You
here.
got. Let's see how quick you can work.
Oh
Yeah.
man. All right. 7 minutes. Price is right. Charts. Let's go. Here we go. All right. NAC. So looking at the 4 hour here, kind of see a big left shoulder, head, right shoulder. This box we're in the middle of is an old daily gap. We'll see if it comes back into play. Below, I've been talking about these daily fair value gaps, and when we close above them, I'd be looking for them to work as support. So I'm kind of looking for more upside here. One thing that's notable, these stops right here, we're so close, and Algo knows that every bear with a break-even stop, they're all sitting right here, and we've come all this way. So I would see that as a target. We've got an old daily fair value gap above, and volume imbalance. This is back to Bender and I were talking about these volume imbalances above before we went into bear mode weeks ago. If we push to the downside, we've got a downside target right here. This is a 4 hour gap between these candles there. So we could be looking for this 15,257.25, and then another gap here based on the pop yesterday would give us room down to this point, 15,104.50. And then again, if we pull back all the way to the orange box is a longer term weekly gap, and then the dailies are these two yellow boxes inside there that we did close above. So we'll kind of see what we get on NASDAQ flow. Should be an interesting day. If we jump over to the Russell, this one is starting to look like a bear flag here on a longer time frame. We had this purple box was the gap created by the pop yesterday. There's this pink box above was this little volume imbalance on the daily, which we've now sliced through. We have our new week opening gap here, which we could get a reaction or a pullback into that area, but definitely seeing kind of like a bear flag type setup here on the 4 hour. I've been talking about this purple line, order block line, that's come into play a few times this week so far, and so we'll see what we get. But these will be some levels. It looks like we're already kind of going to fill in this 4 hour fair value gap with this room down to this 1866.20, but definitely not looking so hot over there on Russell. So we'll see what we get there. The other ones I was going to keep an eye on for individual tickers was based on dark pools from last night. We've got Meta sitting on the one from last night. There was 5.18% sitting right here at 294.24. So if we lose that, next stop would be this big dark pool down below at 288.73. That's from back in June. Above, I'll be watching this 302.40. See what we get if we can get up there. It's kind of a pretty conservative call trigger. So if you were itching to get in sooner, you could probably be looking at this. What's that? 297.45. So we'll kind of keep an eye there on Meta. Looks like it's had some reactions here in the past. And then jump over to Microsoft. Only got 3 minutes here. So Microsoft below, it's sitting on this 327 flat. That was 10% of average 30-day from last night. If we lose that, next stop below, I'd be looking for 322.23. Above on Microsoft, going to be watching this dark pool, 330.11. That's from back on August 7th, this 5.1%. So just kind of call these levels in the room, and that's all I got.
Good job. Well done. You got through it quick. All right. We got about a little less than 2 minutes till open. Don't fuck it up. It's not Friday. So, I don't know what that means besides just don't fuck it up. Hope you all have a green day. Thanks for joining us. See you tomorrow.